But let's jump into what people, I guess, are tuning in for, to listen to the stats of the Hamilton real estate market. Like, we've seen a pretty good decline. I mean, the amount of sales, 19.2% is what we're down.
It's been tough, right? It's been a tough outlook. I know certainly I'm getting a lot of questions about kind of where it's going and where it is, and people are wondering where bottom is and kind of what's happening, because it really is it's a bit of a frozen market, I think, right now, right?
Mm-hmm.
I mean, we're seeing showings down and whatnot, and I think buyers are a little bit cautious and investors are a little bit cautious, and so yeah, no, people are wondering what's happening here. Certainly,
it definitely is.
It's a bit of a strange time, right? Based on where interest rates and whatnot are.
We had a team meeting yesterday and we were talking about it, and you know, even though we're down 90% in the last 30 days in terms of sales. So what that means is basically 1 out of 5 buyers over the last month just said either, hey, I'm going to sit back and wait, or they just couldn't get approved, right? With the newer interest rate, which is a real thing that happens when these interest rates go up, right? Like, what can you qualify for? But one interesting thing we were talking about was how over the year, you know, things went down, sales went down, we're down about like 30%, whatever, in sales. But last year, 1 out of every 4 buyers, 26% were investors. Yeah. So I think that those investors pulled out, and I think that has a large part to do in that.
Absolutely. That's what's actually freezing. Because if you look at what investors are looking at, right? Like, investors are generally looking at what their cost of capital is. So as interest rates go up, and they're also, investors are looking at, and they're saying, well, interest rates, for one, investors are saying interest rates are going to continue to rise, so they're holding. But also when they're looking at getting into the market and making that investment, they're basing the value of their investment based on their own cost of capital, right? So as interest rates now have almost doubled, I think, from the low, right? We're at the 5-year fix, we're over 5%. Mm-hmm. So you know, they have a look at that, and they say, well, the cost of capital is this, so the value of an investment property is associated with that. So that's why you're seeing the perceived value of investment properties is down pretty signicantly, kind of based on that number.
And you have a few listed right now. What do you have listed? Was it 16 units?
Yeah, I've got an 8-unit multiplex in Burlington listed, a 6-unit in Burlington listed, and a triplex in Burlington listed. But it's the same thing, right? Like, you're looking at cost of capital, and then associating that with cap rate. So for example, the challenge we're up against is an investor's looking at the cap rate and saying, okay, you know, you're asking me to pay, for example, a 4.5% cap rate on the property I'm buying. And for those of you who might not understand what cap rate is basically the return on your money, right? So based on basically the income that the property is generating. So if it's at a 4.5% cap rate, that means the money you've put in, you're getting 4.5% return per year. It's basically almost like a 4.5% interest. The challenge that investors have right now is they're saying, well, if you're asking 4.5%, for example, in Burlington, well, they're saying, well, I can get a GIC right now at 4.6. Mm-hmm. GIC is no risk.
And you don't have to deal with tenants.
You're not dealing with tenants. It's no risk, right? Now, maybe you don't have some of the upside and all the appreciation upside and things like that. But that's kind of where investors are coming from right now when they're looking at this market and saying, hold on, like, our cost of capital is changing a lot. Mm-hmm. Not only that, you know, I don't know, we can talk about this maybe a little bit later, but even when you look at kind of the outlook for the rest of the year, interest rates are going to continue to rise for the remainder of 2022 in all probability, right? Just basically having a look at inflation and kind of the macroeconomics, what's happening in the world, what's happening in Ukraine, you know, the price of fossil fuels, that trickles down through an entire economy, right? And it touches everything.
Which we'll touch on in the next segment. But let's jump back into these market stats of where we're at. Like with the average price came down in the last 30 days. It came down, what, 5%? Overall through RAB.
We're down in some areas of Hamilton. You know, we're up over a 30% decrease from the peak in February.
Yeah, that's crazy.
So it's down pretty significantly. Now, but really, it is down. And so for anyone who bought and sold kind of during that period, I always say there's a trade space, right? Most buyers and sellers, you're buying a house and you're selling a house. So if you're buying in a high market, you're selling in a high market. It's the ones that get caught in between, maybe that can affect. But the important thing to note there is, you know, it's down 36% from the peak, but it's up 9% from this time last year.
Exactly, that's the big
thing.
Right,
so anyone who's bought in the last couple of years, you're still, I mean, you've still gotten good gains, but what's happening is the market's pulling back. I guess the question is where bottom is now.
That's it, and who knows, right? One interesting number 2, average days on market is up to 17 days now, which is pretty much, that was unheard of over the last couple of years.
Yeah.
We were seeing average days of 7-8 days. But now 17 days.
We're not used to it. and sellers aren't used to it. And yeah, it's the same thing, right? You look at inventory, right? We got in some areas, it's basically the same across all the markets here in Southern Ontario, right? You're between 2 and 3 months of inventory. So that's between that and days on market, that's a big change for where sellers have been over the past couple of years. So I don't know, this is the challenge I have, right? When I'm speaking to myself, like, what are you saying to your sellers now?
It is what it is. I mean, like, we're looking at, with an average day, 17 days on market, our sold index, which the sold index is basically how many appointments it takes for a property to sell. Remax provides us with these stats, and we see that it takes about 13 appointments for a property to sell. So, I mean, if you're listed for more than 17 days, you've had the 13 or more appointments, then what do you adjust? You have to adjust the price, right? And I mean, they're talking like this episode, the time filming it, what's the date today, the 7th?
Yeah.
So like, this is not going to come out till next week, but the interest rates, July 13th, they're making another announcement. They're even talking like 0.75. So we'll see what that does, right? And then you touched on months of inventory, which is something we actually talk a lot about on this show. If you're new to tuning in, months of inventory essentially is how long it would take for all the homes on the market to sell, given no other properties get listed. So February was 0.7, like it was 3 weeks. Now we're at, was 2.7, I think is the number, right? So, I mean, that's a huge jump, right?
The reality is it's been a seller's market for 3.5, 4 years, right? And a heavy seller's market. So, we're accustomed to things selling in 5, 6, 7 days or less. But we're just getting back. Those of us who are of a certain vintage, right? We remember what it was like to sell a house, and it wasn't 5, 6, 7 days. It was a couple of months. Right? So now it's back to educating sellers again and educating them on the fact that, it's going to take a couple of months to sell your house, and we have to price it right.
I know. I always talk about that. Like when I first started, the average days, like I'm 10 years now. I can't believe 10 years in this business, how quickly it went by. But I remember you're going in expecting 60 days on the market, sometimes 90 days. Like it all depended, on the house. So.
And now, in the recent past, right, it sits for 2 weeks, and the seller's anxious.
Yeah. They're getting anxious in 3 days. They don't get a showing in the first day. What's going on? Right?
So it's an adjustment period.
We've been
right
spoiled.
Now. I think it's an adjustment period for everybody. But this is kind of just one of those. It's just one of those periods we got to ride through and kind of see where we're gonna end up, right? So that's, I think we need to talk about a little about is interest rates and kind of where is bottom and whatnot, and kind of where I don't know. Like I'd say to you, Justin, for example, if you look forward now to January 2023, if you take your crystal ball and you have a look through, I mean, what's your, what are you seeing?
So we're talking about the interest rates or the market?
The market, the interest rates.
So I think
however you want to take
with the market,
that, right?
like, I mean, I went through this in 2017. I remember that we saw the stress test came in and interest rates went up. I remember that 2017, February, it was like the peak too, was back then. And then we saw silence until all through 2018. And then 2019, it started to come back. And by the end of 2019, we were really swinging. And then COVID, right? And then it kind of stopped. And then, so I don't know, we could be seeing... we could be coming out of this in 2023, right? But what do you guys think of the market? Let us know. Be sure to drop a comment below with any questions you have about this market. We'd love to hear it.